In financial markets, there are some ways that you can earn money even when the market stocks, everything, when assets are falling, you can make money, and when they are rising, you can make money. This is somewhat strange because in usual life, when businesses are falling, when people are losing their jobs, when everything bad, traumatic is happening, you just can't make any money, right? It sounds logical. But due to this thing called short selling, you can actually make money when some assets are falling in value. But there is a catch, right? So to explore all about this, let's dive deeper into short selling. What is it and what does it allow you to do? Alright. If you're new here, my name is Loami, I'm from ITTL, and our mission is to help you conquer your finances by giving you the financial education that you need. Alright, let's get to the short selling thing, right? Short selling is usually an investment strategy in which you sell assets that you don't own. How does it work? So you borrow an asset from a friend and you sell it immediately and you buy it later. This all goes to the notion that you've analyzed and thought, you know what, this asset is going to drop in value. And when an asset is going to drop in value, then you can short sell and buy at the lower price and you make the difference, right? So with this said, short selling is something that investors and traders use when they expect an asset to fall in value, right? They short it. Now, as I've told you how to short it, suppose I have a friend of mine, Mr. Dell, so he owned like 500 shares in a company, and I want to short that company because I think it's going to fall in value. So I say short 500, I give the order to my broker, short 500 shares of that company X at the price maybe of $100 per share or 100 Rand francs per share. It's a matter of the currency. So now, if I say 500, that means I'm borrowing 500 shares from Mr. Dell through my broker, and later when the asset drop in value, when these shares drop in value, say one asset is worth now 80 Rand francs, and then the difference between 180, that's the difference I'm gonna make, right? I'm gonna buy him later and give him his shares back, right? But those shares will generally be worth less compared to how they were worth before, right? So that is what we call short investing. Now, as you can understand, short investing works very well when assets are falling in value, right? It was 100, now it's 80, it's 60, it's 50. And the maximum you can get from short selling is when a company goes bankrupt. Bankrupt means the company cannot pay its debt, and as a result, all shares of the company goes to zero, right? So when all the shares of company goes to zero, that means everything an investor had in that company all becomes zero or worthless. And this, if you have shorted a company and that company goes bankrupt, that means you get all your money without having to buy anything else, right? Because the shares are worthless. But in the case of the upside, say Mr. Dell's 500 shares that I've shorted now have risen from 100 to 120. That means I, the short seller, am getting the loss, right? Now the risk here is that in any certain company or any certain asset that you short may go higher indefinitely, right? And it may be higher and higher than you can even think, and this is when you really encounter mass losses. Like if I short his stocks at 100 per stock and it goes way at 1,000, that means I made a lot of losses, right? A lot of losses that you can even imagine. Now, when it comes to shorting, we also talk about something called short squeeze, which is an interesting thing because basically there has been a short squeeze that happened a couple of days ago, actually months ago, with the company called GameStop. Actually, you can go in Google now and type in GameStop, you will see the saga thing, right? So what basically is a short squeeze? A short squeeze is when a large amount of short sellers have shorted the stock, right? And then the buyers who believe in that stock start buying in the stock heavily, and when they buy in heavily, they rise the price of the stock up. Now, the short sellers think everything is going bad because if the price is rising, now they are losing their money, right? So they say, we got to cover our shorts. To cover is just to buy the shares and give them to whom you borrowed the shares from, right? If you're a short seller. Now, covering the shorts means the short sellers even buy. And the more they buy, the more the price of the asset rises in value, right? So if you hold a stock and that stock is squeezed, right? That's all. If you are any asset and it's squeezed, that means all the short sellers are exiting their positions, and as they exit their positions, the thing rises in value like a rocket, right? So that's something that happened with the GameStop thing, like, because this went up like 26 times from $19 a share to over $400 a share. Do you get that thing? Yeah. So that's what we call a short squeeze and short selling. So when do you do short selling, and is it really good for you? I personally do not do any short selling because I think it's extremely risky, right? But in case of a market downturn, you usually do short. You short an asset when you really believe that thing is going down, and you are able to make money when it's falling. But when you're not sure of it and you short it, you're going into a risk. So this comes with your level of confidence in analyzing securities and assets. This is when you say, I am confident that this thing is going down and I can short it. In the past, I had thought about shorting the company, but usually it really even went in my prediction, but I was not quite sure if I'm not going to lose a fortune on this kind of thing, right? So short selling is an extremely risky strategy, right? But it can help you make money when everything is falling. But to an average investor who's not too financial savvy, if you're not very confident about all these things, you better buy and hold and hope that the market downtown will rise up again. Every storm will end and favorable times come again, okay? So that's all about short selling. Does it sound interesting? Let me know in the comment section below, and thank you for being attentive until the end. It's Ilawami again. See you.